Good afternoon and welcome back to Moneycontrol's live stream. You're tuned into Closing Bell with me, Lavisha Darad. So once again, a very choppy session seen in the markets, and in the last 15 minutes, the market completely turned red, and we snapped the two-day gains that we made earlier. Sensex closed flat in the red, and Nifty was also flat in the red, although it did hold above that 24,300 mark. But however, if we look at the entire breadth of the market, that was in favor of the decline. So advanced decline ratio that stood at 1:3. So declines clearly had an upper hand. On the other hand, if you look at among the sectoral indices, Nifty PSU index, the top sectoral laggard, led by the weakness in SBI ahead of its Q4 results, which is due over the weekend. Otherwise, majority of the sectors also flipped in the red, apart from Nifty Infra Index and Nifty Pharma Index and Nifty Realty Index with about 2% gains or so. All three indices. Nifty Auto Index also has ended flat in the green at this point of time. If you look at the broader end of the market, small cap and mid cap indices have seen larger cuts of about 0.7% to 1% or so. So yes, clearly the breadth of the markets definitely had plenty of weakness. If you look at the India VIX, that jumped about 4% or so, nearly 5% uptick that can be seen. So it denotes that there is some kind of fear and caution in the markets after the rally that we have seen in the past 2 days. But to decode all of this, let's quickly get on board with our guest of the show. Joining me is Nilesh Jain, VP Head Derivatives and Technical Research of Centrum Broking. Nilesh, so good to have you. Past 2 days, we're seeing choppy session, and in the last minute or so, 15 minutes or so, we are completely flipped in the red. What is keeping investors nervous at this point of time?
Hi, Lavisha. Very good afternoon to you. Today, if you see, we have seen more sort of a consolidation, at least till the first half of the session, where we saw some bit of consolidation similar to what we saw yesterday. But towards the closing hour, we have seen in fact, 15 to 20 minutes, we have seen a sharp decline. And yesterday was a reversal candle, looked like a shooting star kind of candle we have seen in both Nifty and Bank Nifty. And today we have seen a follow-up on the lower side. So overall, on the back of a weekly FNO expiry, some unwinding was also seen from the put strike. So looking at the overall setup, it looks like we are likely to witness some bit of selling pressure going forward. Even if you just look at the volatility index India weeks, where we have seen a constant uptick in last 4-5 consecutive sessions from the levels of 15, it has surpassed 18 mark today. And currently it is near about 18.5. It is at elevated level and is a cause of concern as well. It needs to cool off below 16 for bulls to regain the control. But as of now, looks like we are likely to witness some bit of selling pressure at the high levels. Even if you look at in the Nifty, the RSI has given a bearish divergence, kind of a negative setup, I would say, where RSI has started making lower highs and lower lows, low top and low bottom. So overall, looks like Nifty should test 24,000 going forward. Till time it doesn't break above 24,500, the setup looks negative. Similar is the case with the Bank Nifty as well. Yesterday it formed a shooting chart. Today we have seen an underperformance in the banking space as a whole. So we are expecting a follow-up move to continue towards 54,500 to 54,300 on the lower side in the spot levels, and 55,300 is the important resistance zone.
Okay, Nilesh. Nilesh, what about the defense stocks? Because even that saw a bit of cool off today. And given the kind of run up that we have had past 2-3 days on account of border tensions, do you believe that this could be sustainable going ahead?
Right. So, Lavisha, if you just look at the structure of the defense space as a whole, be it HAL, Mazgaon Dock, in fact, these two stocks have witnessed a good momentum recently. But now, if you just look at today's move, it is kind of merely a profit booking, I would say. The major undertone still continues to remain on a positive side with a buy and decline approach. And our preferred bet within the defense pack would be Mazgaon Dock, which has hit a new record high today. Although some profit taking was seen, but the major structure for Mazgaon Dock looks strong. And we are expecting this counter to move towards 3250 to 3350 on the upside. So with a stop loss below 2850, any dip from here can be used as a buying opportunity. Since we have seen a good spurt in last 2-3 sessions, so some profit taking that cannot be ruled out. But from here, any dip should be used as a buying opportunity.
All right. Let's talk about one stock in focus that was your top Nifty laggard also, Bajaj Finance. Uh, After investors were unenthused, given that the company trimmed its growth guidance for FY26, and that's what disappointed investors. Nilesh, how would you suggest investors to approach the counter now that they have also announced a stock split, bonus issue, and even a special dividend?
Right. So today we have seen a result back in this particular counter, but if you just pull up last 6 months, 1 year chart, you can see the counter has been in a strong uptrend, and this correction is giving a good opportunity to start accumulating this particular stock. But there could be possibility of some short-term impact because the stock has broken its important support. Today we have seen a build-up on the short side as well with the OI addition of close to 9%. The stock has broken below its 50 DMA as well as 21 DMA. So short-term structure is indicating the counter may test the levels of 8,500 to 8,400. But positionally, we expect this stock to move towards 9,000 again, but that will take some time. But at present, it's an avoid. If at all it falls in the range of 8,400 to 8,200, that can be a bargain buy.
Okay, 8,200, that's where it could be a bargain buy. Let's take another stock in focus. That was your IndusInd Bank because it did recover about nearly 3% from its day's lows after RBI approved an interim leadership team to ensure there is an operational continuity after MD and CEO did resign from his post. But Nilesh, given the uncertainties which we are having surrounding the lender, and several brokerages are also pegging the lender to report a weak set of Q4 numbers. So, what's the next downside we can anticipate or we can watch out for?
Stock did make an attempt to witness some bit of rebound after a carnage that we saw in this particular counter on 11th of March. And after that, the stock tested the lows about 620 to 630 zone. And from those levels, we have seen a good gradual up move. So there could be possibility of some bit of consolidation, but it is not looking it is not giving any sort of a confirmation of a trend reversal as of now. It is merely a consolidation that we are witnessing with a gradual up move. So it's an avoid from our side in this particular stock. Better not to trade from a short term perspective. Better wait for result to span out. And as far as levels are concerned, 775 is an important support on the lower side. I would wait for a breakout above 900. If it breaks decisively the level of 900, then it's a buy. Buy for the target of 980 to 1050 if it breaks above 900. Till then, I would be waiting and watch out for the result as well.
Okay, watch out for the results for IndusInd Bank. But yes, one stock that did react to its Q4 results, that was your Varun Beverages. We saw that from day's lows, the stock recovered nearly about 1.5%, and it reacted positively to its Q4 results, although it did end with a cut of about 1.6%. In Q4, we saw that the profit rose about 35% year on year, and revenue was also up by about 29% year on year. Nilesh, what do you think about Varun Beverages? Do you believe that it is the right time to accumulate? Because several brokerages earlier had pegged a target price of about 800 rupees for Varun Beverages.
The stock is facing multiple resistances. It is trading well below its long-term 200 DMA, which is placed at 570, and it has also broken below its 121 DMA as well. The momentum indicators and oscillators have also given a sell crossover, so that is a negative sign. Today's fall was also accompanied with a good volume. So the structure is basically indicating that stock may test the levels of 480 on the lower side. So it's an avoid taking any contract at present level and wait for a breakout above 560. If it breaks 560, then only it's a buy. Otherwise, it's an avoid at current level. We are expecting further downtick to continue towards the levels of 500 to 480.
Okay, all right. Currently an avoid for Varun Beverages too. Let's take another stock in focus. That is your Vishal Megamart, because it did hit a 10% upper circuit after its Q4 results. Nilesh, how do we expect the stock to perform from here on? Its record high levels is at 126 rupees. Can we expect it to breach its record high levels soon as well?
Today we have seen some bit of impact positive on the positive side in this particular counter. The stock is currently trading at 118 rupees. Looking at the structure of previous 6 months, it looks like more sort of a rounding bottom kind of a formation. So a gradual uptick is something that we can expect that may take this particular stock towards 125 to 128 in the near term. But since we have already seen a good spurt, so it's an avoid. because the risk and reward is not favorable. If at all you see any dip towards 112, 110, that can be a good buy. But as of now, it's an avoid. Those who are already holding the wrong position can continue to ride this momentum, and it has a potential to test 123 to 128.
Okay, 123 to 128. Let's take another stock in focus. That was your Ujjivan Small Finance Bank after it reported a weak set of numbers, and the stock did react to it, seeing a cut of about 3% or so. Nilesh, how do you see other microfinance lenders in the space also, be it the likes of Credit Access or even Jana Small Finance Bank? Is it a clear avoid at this point of time?
Well, as far as Ujjivan Small Finance Bank is concerned, it's an avoid. Reason being, the stock has gone into extremely consolidation kind of zone, I would say, where the stock is facing a constant resistance 45 to 46 zone, and it has a very strong support at 75. So that's the broader range, 35 on the lower side and 46 on the upside. So if it breaks 46 level on the upside, then we can probably see a bottoming out of process in this particular counter. But as of now, it's an avoid credit axis as well, because this particular space is going through some bit of pressure, and this pressure is likely to extend further for next 1 or 2 months as well. So as of now, we are not advising to buy. We would like to wait for a confirmation on the chart.
Okay, all right. Confirmation on the chart. Let's take another stock in focus. That is your C8. After it reported its good set of numbers, the stock was also at 4-month high and it has ended with about 6% gains. Nilesh, brokerages have attributed the company's effective cost management, and they expect that other tire companies are also expected to benefit going ahead. We saw the likes of JK Tires, Apollo Tires also reacting well after C8's results. So, what do you expect? How do the tire stocks look like on the charts for the short term perspective?
Well, Avisha, all these three stocks that you have just pointed out are looking
Mm.
strong on the chart. CET has given a good spurt of over 7% today. The structure wise, it looks like it is heading towards 3,500 in the near term. But at present, it is not advisable to buy. Better wait for some dip towards 3,100 to 3,000. That can be a good entry point for this particular stock with the stop loss below 2,800. Our target from a short term perspective is somewhere around 3,500 plus. Now, coming to other tire counters, we are also liking Apollo Tire. This particular counter has formed a good base formation, and I would say a rounding bottom is also in the process of making. So from here, we can expect another 8 to 10% kind of move on the upside, which may take this particular stock towards 500 to 520. So with a stop loss below 445, any dip can be used as a buying opportunity. Apollo Tires, C8, both the stocks are looking positive, and also JK Tires is also looking like witnessing a catch-up move in this particular space.
Okay, all right. Let's take another stock in focus. That was your Shoppers stock after it reported a weak set of numbers, and the stock did end with a cut of about 6% to 7%. And even Trent, if you look at another retail stock, that also did not impress investors a lot. Nilesh, how do you see all of these retail space on the charts, be the likes of Aditya Birla Fashion or even Trent or even Shoppers stock, which has reacted quite weakly, responding to its weak set of numbers?
In fact, all these three stocks are witnessing almost similar kind of structure, which is on the downside. Now, coming to Shopper Stop, the stock is in a gradual decline. We have seen highs near about 900, where a double top formation can be seen in the month of September 2024. And since then, it's a kind of a gradual decline in this particular stock. Structure is looking weak, and we may see further downtick towards 490 to 480. So it's an avoid. And also, as far as Trent and ABFRL, both the stocks are concerned, both the stocks have a similar structure of continuation of a low top and low bottom. So Trent looks weak for 5,000 kind of levels on the lower side. ABFRL is also looking slightly on a weaker side. Out of these three, if at all I have to pick any particular counter, that would be ABFRL. Comparatively, this particular stock has a better structure, but still at present I would avoid. If at all it falls in the range of 250 to 48, that can be a good entry point.
Okay, all right. Just one last question before we let you go, Nilesh. What would be your picks at this hour? We're seeing a bit of caution in the markets. We've seen a good run up also. What would you be buying right now?
Right. So insurance pack today witnessed a good momentum, and given the kind of volatility that we are witnessing in the market, where it looks like we may see another round of selling going forward. So the focus will shift towards defensive. So insurance space, specifically HDFC Life, this particular stock is looking strong on the chart. The structure is basically indicating that the stock is likely to test the levels of 760 to 775 on the upside. If you just pull up last 8 months chart, it is forming a good rounding bottom formation where the major resistance of neckline is placed at 760. If it breaks above 760, then target would be somewhere around 850 to 900 as well. But at present, our short-term target is somewhere around 760 to 775 with a stop loss below 720. HDFC Life is a buy. Apart from that, we have seen good momentum in oil and gas space as well. IGL, MGL, both the stocks are looking positive on the chart. IGL we are preferring this particular counter because today we have seen a good OI addition as well as good volume activity can be seen in this particular counter. So with a price target of 200 plus, IGL is also a buy. Keep a stop loss below 185, and the short-term target would be 200 to 210.
Okay, all right. HDFC Life, IGL, MGL, those are the stocks that we need to watch out for. But with that, we have to let you go, Nilesh. Thank you so much for your time and for the rest of the queries.
Thank you, Lavisha.
All right. With that, we've come to an end of this edition of Closing Bell. Tomorrow is a trading holiday on account of Maharashtra Day, so we'll be back with markets on Friday. For now, it's a wrap. Thank you for watching.